The Bulls versus the Bears. Get in the game. www.tackletrading.com.
Matt Justice here for Tackle Trading to give you the market recap video for Monday, January 25th. It's a pleasure to be with everybody here for the 25th of January. This is a little bit different of a market recap today, as obviously it's not a recap. It's more of a preparation for the weekend in trading, as I'm stuck here in DC. By the time I get in, surviving the winter storm of the storm of the century over the last few days. We're digging out right now, getting ready to get back on the airplane and get back home. So as I prepare for doing that, I thought I might as well put out a market prep video instead of a market recap video. And it's a really big week in the market. The market this week, after what we've seen just really since the very beginning of the trading year there on January 4th, we've just been seeing some ridiculous volatility out there. Certainly not unprecedented. We've dealt with this many times in the past, but we have seen some increased volatility out there in the market. With the volatility index, if you can go to the VIX, that would be the volatility index, otherwise known as the fear index, spiking up above 20 to a high of around 32 before it's been coming back down recently as the volatility in the market has actually subsided to a certain extent over the last few days. It came in here to a support level right around 1850 in the market. You also have a support level at 1870 in the market as well. And the question becomes now, is this going to be able to retrace back up into resistance? And when we're looking at the week this week in the market, there is just an absolute ton of news this week in the market. Let's first start with economic news. It's coming in on Tuesday. You get consumer confidence report on Wednesday, the FOMC policy statement. You also have on Thursday core durable goods, and then on Friday, you get the advanced GDP number, which is coming in, which is supposed to come in right around 0.8, which is economic stagnation. So we got a huge week from an economics perspective in the market this week. I'm first looking at that FOMC policy statement. The reason I'm looking at that FOMC policy statement this time is I don't expect them to do anything. I don't expect them to raise rates. I don't expect them to lower rates. I don't expect them to reverse course. There's been a little bit of sentiment out there in the marketplace that the Fed is looking to calm the market again. And when I'm looking at that sentiment here, since they raised interest rates there in December, we're down about 5% since they did that. If you look at the very top, just in terms of this year in the market, we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 trading days in the market so far, and it obviously has been mostly to the downside. But is the Fed going to reverse course, of which they've been planning this for over 9 years, because we went down a little bit over a 14-day period, a 3-week period in the market? And I just don't see that happening. I don't think the Fed's going to look to calm the market right now. I think the Fed's looking at maintaining their fundamental outlook, which is a long-term outlook, that the economy is healing, that the labor market is doing better, and so I look for the Fed to absolutely do nothing on Wednesday, and because of that, I don't expect the market to go up that much on Wednesday, given the fact that my assessment basically reads that it's going to have a little bit more of a neutral to hawkish feel coming into this year. But as most Fed events, we take a wait and see approach in terms of that movement, and as many of you know, the Fed is usually, we get a lot of excitement around the Fed. We get all worked up, amped up. Everybody's excited. We got this major Fed meeting. Price action is going to run amok, and it's going to go up a lot, or it's going to go down a lot. Things are going to get crazy, and all of that, and then boom, nothing happens with the Fed, and that's fairly typical. I usually get a little bit underwhelmed by the Fed based on what they do. And then on Friday, I think as important as anything this week, including the Fed, is our GDP data. Our GDP data is gross domestic product. You have basically 4 types of economic standings. You have what is called the boom market, where you have rapid growth above the rate of inflation. You have economic stagnation, which is basically zero growth to the rate of inflation, typically around 2.3%. Then you have what's called a recession, negative growth, 2 consecutive quarters, and then you have what is called a depression, which is 4 consecutive. When I'm looking at the marketplace right now and I'm seeing, okay, we have the advanced GDP number, which is supposed to come in right here at 0.8. That is what we call economic stagnation, and that's really kind of where we've been at for the past year, is a little bit of economic stagnation. So I don't see that changing anytime soon. I think the dollar is going to have a negative impact to that as well. So we got a major economic week this week in the market, but also we got a major week from an earnings perspective. And I think even more than the economics of the week, the Fed, consumer confidence, durable goods. We have things like McDonald's, Apple, Amazon, Boeing, Alibaba, Baker Hughes, Biogen, Discover Financial, MasterCard, Ford, Facebook, Halliburton, Johnson & Johnson, Lockheed Martin, Microsoft, Under Armour, and that's just to name a few of the 145 large cap companies and above reporting earnings this week. This is really kind of what I see as the heart of earnings season, is this week and next week when we got a lot of tech stocks that are coming out there. We get a lot of industrial stocks that are coming out there reporting their earnings, and that's kind of what I'm looking at this week, with some absolute giants that everybody has to kind of look forward to, and that really kind of starts right here with the Apple reporting on 126 after the market closes. So they're going to report tomorrow night. I want to look at Facebook right here. Facebook has been one of the stocks that led the market in 2015, and they're reporting on the 27th here this week. Let's look at McDonald's, which reported today. McDonald's reported this morning in terms of their earnings, and as you can see, they did move up, and they're up about 1.5% so far from the close the other day, and they did report very good earnings. Their all-day menu, breakfast menu, is so far it's a hit for McDonald's as well. You do have a couple other things though, with Halliburton reporting earnings, and they have a little bit, and they're coming out on 125, so they came out this morning, and they had a little bit of an earnings forecast miss, and they're down just a tiny bit in the morning so far. Nothing really to see there though, down about 1%. And then Kimberly Clark Corporation had a bad miss, gap down to the downside, recovered a little bit at 123, down about 2% so far. Earnings so far, you're starting to see a little bit of the revenues miss, and that's to be expected. We missed revenues all of 2015. Beating earnings per share has been a little bit of a hit, a little bit of a miss. Forward guidance is where I'm a little bit concerned though, and the reason I'm a little bit concerned about forward guidance is because they're starting to, a lot of companies out there are now starting to say, okay, I'm a little worried about 2016, and rightly so, absolutely rightly so. But that's where we're at right now with earnings. So I expect earnings to really take the forefront this week in the market, even outside that of a big economic week. Expect a lot of movement this week in the market, even if it ends doging by the end of the week. I do expect a lot of movement in the market this week, so prepare for that. It's a week that could be a catalyst for the very near term future as well. So we got a big week economically, big week with the earnings date. Let's go ahead and look at it from a technical analysis perspective. The stock market is currently at support at 1890. We're looking at an intraday support level. As you can see, it had been trailing down. It found support right there, 1890, and starting to tick back up on the intraday. If you're looking from the open of yesterday in the market, the Sunday open, really down about 8 points so far, but nothing to be too cautious at in any capacity. I do expect it to be a little bit of a slower day from a volume because of the epic storm of the century that dumped 30 inches of snow on my hotel here by Dulles Airport. But a lot of the East Coast cities got rocked here: New York, Boston, Philly, Washington, D.C. And so I do expect it to be a little bit of a slower day from a trading perspective as those cities start to dig out from the storm. But we're looking at a market that's kind of seeing not a whole lot of movement so far today, and I don't expect that to to really do much anything today. There's not a lot of economic news today. There's really not that big of earnings reports news today, but I do expect it to start picking up on Wednesday, Thursday, and Friday. Right now, from a technical perspective, you hit support at 1850. You're coming back up into that 1900 level of resistance, more of a psychological level than anything else. A standard retracement would get right back up into 1950. My expectation is this is going to retrace before it makes another preceding move to the downside, but we'll have to wait and see on that one. I do have a slightly bearish bias on the market itself, and if we break 1850 right here in the market, if you look at your lower levels of support underneath that 1850, we're looking right here. You're looking at a support level right about 1765, and then you have a fairly important one at 1700. But outside of that, nothing as strong as what the 1850 level can build and can bring right here. So we're looking at, and I'm looking at that number right there, a close underneath 1850. I'll switch to bearish. Outside of that, I'm slightly bearish with an expectation that this could retrace back up into 1950 before it starts to make another run down to the 1850, and it's simply because I believe it is overextended to the downside, and I'm waiting for that retracement before it makes another move to the downside. This is Matt Justice for Tackle Trade. Hope you enjoyed the market prep video, or otherwise known as the market recap video. I am out.